Good day everyone and welcome to session recap. This is Nenad speaking. Today it's 18th of April 2016 and we will have a probably very interesting week, and there are some setups, but you need to be very careful, because if you check the calendar you will see there is a lot of news kicking in very soon. So you need to be very careful. I have prepared some of the setups for you, of course, but to be honest, I'm not sure that I will trade it either, because I don't know, there is really a lot of things going on. As you can see, probably you saw some gaps during yesterday early trading, and today every single of the gap was closed, and oil spiked up. It led up with bullish equities, and all yen pairs also spiked up. So there is some uncertainty in the market, and if you check the calendar you will see a lot of important speeches kicking in very soon. So technically there are some setups, but fundamentally I'm not sure that they're aligned. So you need to be very carefully, and as I always say, take it as your own risk. But today it's special because, not, as I always say, not every day is for trading. And if you see that there is some possible big news coming in, you would probably want to restrain from trading. So you really need to be careful. Before we begin, as always, our standard disclaimer explaining that online education materials are developed by Armenian Markets Estonia for a global audience, so please take into consideration that information in this session is not suitable for everyone. If you want to get a corresponding information on charting conditions and any other detail, you should visit Armenian Markets Global, select your country, and contact an appropriate entity. Risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. And final part explaining that Armenian Markets takes no responsibility for information accuracy. This is solely my opinion, and this webinar is for informational and educational purposes only. Also, you can download, and I strongly encourage you to download Supreme Edition. You can do that by logging into your trader's room. Also, web trader client is available at this address. And have in mind that you're trading with Best MT4 broker. Grow Stronger deposit bonus up to 50% is live. You can calculate your bonus by clicking here. And also, guys, there is a strategy that I have presented. I hope that you seen it so far. So how to use proprietary strategy for trading deposit bonus. And here you can see that this is the strategy. Let's do a quick sound check. Alex is saying that there is no sound. I see that there is a sound. So please, can you confirm that you can? Yes, Bob is saying fine. So sound is okay. Thank you. So here there is a strategy based on Heiken-Eshi and multiple time frames. I personally developed this strategy. It's suitable for all traders. Of course, guys, if you know how to trade, if you already have your own system, then it's okay. But for all of you who are still struggling with systems, try this one. The rules are clear. I also made a small video, so short video, so you can actually use some information for trading. So this is suitable for trading deposit bonus, because deposit bonus is a bit of risk to reward. You need to go with higher risk in order to claim the deposit bonus. So this strategy can give you multiple entries per day, okay? So that is it. Now we are ready to see the final part, explaining how we take trades, and then new setups. So we always need to give price a breathing room. We enter, I need to change this, guys. 15 pips is our buffer, so this is maybe surplus, this number here, so we don't need to put it as 5. So it's 15 pips of the predicted level if it's an agreement with your system. I will change this immediately, okay, because our buffer zone is 15 pips, okay. Okay, our buffer zone is 15 pips. Okay, POC or buffer zone. Okay, so this is it. Okay, let me save this and we are ready to go. So 15 pips of the predicted level if it's in agreement with your system. And definitely this is our POC or buffer zone. I always say POC, it's point of confluence, or buffer zone where we enter the market. I advise you to scaling in if you want to, let's say, divide your possible positions. Respect your stop loss, always respect your stop loss. And the thing is, you never ever move your stop loss. Add a spread to your stop loss if you're trading with ECN account, then your spreads are very low. So please try to add in between 2 to 5 pips to your stop loss, just to cover for some possible spikes. We take only one position, whichever hits first. First touches of the zones and levels are most profitable, always, because you see, and you know what happened today with Euro Yen, that our POC was basically the single possible shorting point, guys. POC. And our POC almost made to the target. My target was 122.14 and it went to 122.20 or 21, something like that. So it was a couple of pips short from the first target. But the thing is, that was the only possible POC to short Euro Yen into. After it, it went higher and higher, led by bullish equities that were also driven by oil today. So that is why I always say today that was a perfect example. The first touch of the zone is most profitable. Position trades are always trend trades and alternative trades are always counter trend trades. Breakout trades and scalp trade levels are done independently. They are second entry. Okay, they serve as a second entry. Depending on time and volatility, usage of trailing stop is highly recommended. I never ever recommend you to take below 20 pips of a profit. So we never take below 20 pips. It's only, for example, if you see that price is really going nowhere and you want to protect your trade, then you can close it. But most of the time, we never ever take less than 20 pips. These setups are valid for today, tomorrow, and sometimes the day after tomorrow. Scalp trades should be done at or very close to important support resistance levels. All levels are calculated by historical levels and Camarilla. You can add these levels to your system and always pay attention to my Twitter updates. And the term pips pool is the maximum available number of pips you could have got on recap entries. Past week results: Euro dollar 30 pip win, pound dollar 90 pip, Australian dollar 70 pip, New Zealand dollar didn't qualify but trade went in our direction. Gold didn't qualify but again trade setup went into our direction. So total pip pool was 190. Trade of the week definitely pound dollar. And these are only session recap trades. We are excluding analysis that was also very, very good. For example, Euro dollar, the analysis that I did on Friday, it went to the upside, hitting the target after the breakout. The breakout of bullish, it was a bullish N, if you remember my analysis on Friday. And we actually bought lower and we had great number of pips. And also today, Euro dollar was a bit bullish. So that is, I'm still like, I prefer to buy dips in Euro dollar. So we will see today's setups. But first, let me show the results. This was market plan for Euro dollar. This was the webinar time. This was our entry. And you see the target was hit. Well, not the target, sorry. The 30 pip was hit. After that, euro dollar went down, and the rest is history. As you probably know, on Friday we had a good setup that was targeting 13.20, and it was hit. Pound dollar was a trade of the week. Our buy trade was initiated at 1.4190. Our stop loss was only 25 pips, and you can see we got a great number of pips. It was like 90 pip possible here from this spot to this spot. This was webinar time, and here the trade was initiated straight to the target. Perfect setup. I like this. Pound dollar, the trade of the week. Australian dollar could also be the trade of the week, but pound dollar had almost no drawdown, and it really didn't have any drawdown, while Australian dollar had some drawdown. So this was our webinar time. This was our entry. There was a drawdown, but our stop loss has never been hit, and you can see what happened afterwards. Well, our sell position was initiated, and we had nice pips from this setup, like 70, 60, 70 pips depending on your entry possible. New Zealand dollar didn't qualify. This was our webinar time. Here we had a possible pullback towards 67, 65, and here you see probably if it was for me, I would really prefer to short it lower, but problem is that the price has never made any pullback to the lower part of our POC, and we didn't have a trade. But still, trend was pretty much hit. We made a good prediction about the trend, and New Zealand dollar actually went up. So maybe you could have done your own entry with your own system following the trend. Same with gold. I predicted that gold will drop, but from 12.65, actually it was 12.56 at the time of the webinar, and it went to 12.62, not 12.65. So I did a good prediction because gold really fell down, but our trade was not initiated because I wanted to short it a bit higher. Quick question, Alex is asking, can you tell me where I can find webinar recorded? Okay, the webinar will be uploaded to Admiral Markets YouTube. Let me, YouTube channel 1 hour after the webinar. So you see, gold, well, this was my first time that I did gold analysis, and to be honest, I don't have a problem with it. Maybe I can do it more occasionally. But you know, gold is a bit volatile. So it will not be always that it hits our POC then drops. The thing is, you see, we had our webinar time was here, and the price was around 12.56, 12.58. So the price made a good pullback towards 12.63, but my POC showed 12.65. So you see, we got a good trend prediction. But the problem is it didn't make to 12.65. So that was a bit unfortunate, because you see, our targets wouldn't been hit, really, all targets that I predicted. And maybe you did a short with your own system. So, well, guys, what can I say? You could short it here maybe, or here, using some price action, or, but the thing is, it was really bearish. Okay, the question, did you use a trailing stop for Australian dollar? Well, you can always use trailing stop. It's up to you, Al. As I say, it's up to you how you will manage your trade. Maybe you exit it here. Maybe you can scale out and put the rest to break even. It depends how you manage your trade. What I did is I actually closed the first part of the position somewhere around here and put the rest to break even. So that is how I do. I'm not greedy. I always go for pips, and only occasionally I go for money, but I'm focused on pips. So you can always scale out, put the rest to break even, and enjoy a free ride. Euro dollar was a possible win if you protected your trade after 20-30 pip, you see, because the trade went here, okay, and it didn't hit the stop loss. This was not 13.20. It made like 30 pip and then it dropped. It made another breakout. So when you see that the price cannot break a certain level, close your trade. You definitely need to manage your trades, guys, by your own. I cannot manage that for you. So what we had basically last week was good, and we had possible 190 pip. Well, if you made 20-30% out of it, still good. As I say, the market is volatile. Things can change in a single hour, and you need to be careful. This trading today is not the same as it was 5 years ago or 10 years ago. It's harder, guys. Of course it's harder because there are a lot of participants in the market, a lot of things that move the market, and you really need to be well aware of all of it. Market plan for euro dollar, I would go to buy position at 12.60, stop loss is 12.20, target is 13.20, second target 13.60, third target 14.00. I would go for a sell at 14.10, 14.50, and 13.60 is the target. Now let me show you the chart. Okay, guys, here it is. You can see that euro dollar is, as I predicted on Friday, is still going up. This is retracement in downtrend, but on intraday time frames it looks bullish. It really looks bullish. It also has a channel here, okay, not a perfect one, but still good. Okay, there is still a channel here, and the price is trying to actually go within this. I'm not saying this is a perfect channel, but let's say if we put our like this, okay, it looks like it can also be a bearish wedge, right? Because we already had a breakout on Friday that reached our target 13.20, and you see it's still struggling to break it. So what I would do is actually I would try to go long a bit lower here, because if we go with this trend line here, you can see that actually it's a bullish trend line, okay, like this. It's a bullish trend line like this, and you can delete this one. So this looks like a bullish trend line, but this is not a strong intraday trend, because this is major trend. Major trend now is to the downside, and this is a correction. And look at here, if the price touches this region here, it can be head and shoulders. Okay, this is head and shoulders, you see? Possible head and shoulders, because this is triple top here. Price can go hitting this region here, but also it can extend towards H5. So if it extends, it will still be a form of head and shoulders. And that is why I want the price to actually sell from this region here. So this is it. 1 hour is showing bullish price action. We might try a long trade around this region here if it drops. We might try a long trade, but if this region hits first, we can try for a small short trade. I will add this because my primary selling spot is actually this one. 70 around this region, 78.6. So I will add, pay special attention to 1350 to 1360. Okay, so pay special attention to 1530, 1560 short. Special attention to 1.1350 to 60 possible short. So watch for it. Okay, you need to watch for it. We have major news kicking in for other pairs, so we might have this one. Okay, and so this is it. Okay, euro dollar. Pay special attention to 1350 to 60 possible short. Okay, and this is it. So from this region possible, head and shoulders, if it breaks, your target should be 13, 20, 12, 1300 and 1260. So pay attention to this region. At least I hope that this can be a good scalp. Okay, but I think that this level here, the zone here, within the first touch, it should be rejected. So if we see a first touch of this zone, it should be rejected. I don't think that it can break like a knife through butter. I don't think so. I think that it can be rejected immediately as it enters the zone. So pay attention. Okay, so you can take that one short here, and if it goes later towards this region, I expect another drop, because this zone here is showing very, very strong historical sellers. Look at these sellers here, guys. Look, a lot of historical selling. So pay attention to this spot first. We could see a good short. I'm paying attention. Pound dollar, well, tomorrow a lot of important news. If you open a calendar, okay, you will see a lot of guys news kicking in, and I'm really not keen to trade a lot when there is such strong news coming in, really. So you should be very, very careful, really, very, very careful. I will show you the calendar now, and you will see a lot of important news. For example, if you open Forex Factory calendar, you will see here, see a lot of things going on tomorrow. Monetary policy meeting minutes, German economic sentiment, building permits, Governor Stevens speaks, Bank of Canada governor will speak also, Carney will speak too. So a lot of fundamental releases. So you really need to be very, very careful. Okay, you can check also the calendar here. So there will be a lot of important news, guys. So please pay attention. Okay, please don't rush in trade. This is technical setup, but it's always like that. When important person speak, when an important person speaks, you will always see some volatility, and the volatility is not always technical. It can kill your good trade, kill your profit, so don't let it do it. This is market plan ranging 43.35, 43.55 stop, 42.00 possible short. Really very, very small stop loss. Well, that is what I see, because if we see a breakout of 43.50, we could aim for higher levels. So this will be important level, 43.50. Okay, I will show you the chart and the reasons why I think that. And buy position could possibly be initiated at 41.80, 41.40 stop loss, 42.80 is target. And look at this, guys. This is what, look at this possible W here. So it can be either rejected from this region or it will be a breakout. There is no other way. It's either or. See? Look, this is range. Still, looks like a range. You don't see a lot of setups now on pound. It's a bit rangy. We don't have a clear trend. This was a clear trend here. Look, this is a trend here. And this was small upward trend correction. This was also a trend. But look at this now, it's ranging. So this is very important level, okay, 50. So that is why I'm saying it will either break or be rejected. So that is why you should be paying very, very special attention to this region too, really. So this is pound dollar. And be warned, BOE Carney governor will speak tomorrow. Yonad is saying cable moved a lot. Yes, cable moved a lot. So you see, it's still, as I say, it's very grateful to predict anything very, very solid when price is moving up and down the whole day, and you have a range. So this is not a very, very good pair to trade at this point. So see, really arranging market conditions. There is a big range going on here, so not a great pair to trade. Australian dollar, I think it should go up, but you have a MPC meeting minutes, okay? MPC meeting minutes. Apostolos is saying I had major damage from GBP. When, Apostolos? Session recap last week gave us huge number of pips, so it was not from session recap. I don't know when you traded, because I showed you that you actually could make good profits with pound. If I'm to show you again, this was the trade of the week. You did your own trade. Okay. After I bought on Thursday at 42. Well, you need to be careful. I always say, guys, not every single day is for trading. You need to know when is enough, when to stop, when you should protect your trades by not having any position. Because even when you're trying to build up your account, as I do, you know, low to high build up project. Currently the account is at 1,400 euros, so I almost made it 5 times the initial deposit. The initial deposit was 350, and actually the first stage has been completed towards 1,000. Now I'm in the second stage, in between 1,000 and 5,000. It will take some time, definitely, because it's easier to pump from 350 to 1,000 than it's from 1,000 to 5,000. It takes really a lot of time, a lot of effort. You need to be careful with risk. You can always be very subjective concerning your risk. So I'm careful, but I'm very happy how it goes, really. I might publish a new update on low to high build-up project, but it's still in the second phase. Australian dollar is bullish, and that is what I really think. But the only problem is that we will have meeting minutes. So what can happen is price drops, then goes up. I'm trying to predict a drop if something happens, and this is what I see on this can even go to 0.800, guys. I think that Australian dollar is really bullish. So Australian dollar is bullish. See here a bullish price action, strong price action. So I'm looking to buy. Where we can buy it, I would say around 60, 76, 70. So around this region here, guys, around this region. You see, it's important, but you need, this is advanced pattern. Do you remember ODN setup? ODN setup was in I did it here with Albion Markets. ODN, look at this, is in bullish advanced mode. And what happened is it went up, hitting our target. These are bullish candles. Look, bullish advanced candles. And something similar we see here. Look at this. Bullish advance. And this is clearly bullish to me. So I'm looking to buy Australian dollar. As I say, because the price had a gap, the gap was closed, now it's going up. It's very ungrateful to predict anything. So, and again, we have MPC meeting minutes. So what I'm paying attention to now is 76, 70 to 80 zone. So guys, I mind you, this today's setup might not be as good as our previous setups. So please take that into consideration. The only reason is a lot of movement on Sunday open, a lot of gapping on Sunday open. All the gaps were closed and trends were changed, and there is important news kicking in. So that is why I'm saying pay attention to this, but don't overtrade. Don't do with big risk. Today is a special day that we should be very, very careful about our trading. So this is bullish to me, but we still need to see MPC meeting minutes. Some things can change after the minutes, so you need to be careful. Okay? Euro yen, I still see a downtrend, and this is what I see: sell position here, stop loss here, target here. Use your trailing stop if you initiate a trade. What happened today is, as I said, this was the only way you could short it. And here we had a short. Look at this. We had a perfect short from this region, because after I made a setup, price dropped like this, almost to the target. It was a couple of pips away from the target. You see? So this was the analysis, and this was after the analysis here. And I clearly said the target is 122.14. So 8 pips shy from the target. The price dropped, almost hitting the target, and then it reversed. Oil went up, equities went up, euro yen went up, risk on. So why I try to go short is, I will show you the chart, the reasons. See the reason here. This is consolidation zone that has been broken to the downside. See here. This looks like a bearish pennant, and it was broken to the downside with a gap. So the only possible confluence to sell is here. If this breaks, it can go a lot higher, guys. So this is what I see on euro yen. If this holds, we can see a rejection. If this breaks, we will be in bullish mode. And you see here today, the analysis which I did, the only possible rejection was at POC. So now you see again the power of point of confluence, or the power of POC. The only possible good short was here. After it, it went up. So POCs are zones where you can make your entries. POCs are zones where historical buyers and sellers meet now moment buyers and sellers with candlestick and chart pattern levels. So those are 90% of the time best possible spots for some pips to be made. Rejections, bounces, that is the power of POC zone. Finally, dollar CAD, and again we have a Governor Polo speaking. So tomorrow there will be a huge day for Forex pairs. Euro dollar, every single pair, euro, dollar, CAD, Australian dollar, New Zealand dollar, yen, everything is important. So as I say, if you need to trade, then try to do it with a low risk. But if you don't need to trade, you can just watch this, try to comprehend the reasoning behind it, maybe do a quick scalp here and there, but definitely do not overtrade, let alone do not over risk. You should never ever risk higher if you have strong fundamental day, and tomorrow it will be very strong fundamentally. So dollar CAD is in downtrend. I would be looking to sell really at 29.00, stop loss 29, 29.40 and 27.50 is target. So again, dollar CAD is bearish, very bearish, guys. But watch this. This was oil. What did I say? What did I say 100 times before? Oil is linked to CAD. Oil up, CAD up, dollar CAD down. That is the correlation in between dollar, CAD and oil. So oil up, dollar CAD down. Oil down, CAD down, dollar CAD up. Bullish equities, oil up usually. Bearish equities, oil down usually. So this is what happened yesterday, and look how the price went. Why it dropped? Because it's generally, technically, it's in downtrend. This was just a fake out, a gap that was made by oil failed negotiations. Those failed negotiations about oil cutbacks hurted. They hurt really heavily. CAD was hurt by it, and dollar CAD went up. Today, CAD was a bit stronger, sorry, a bit weaker, and dollar CAD went down. So CAD was stronger, yes, sorry. So yesterday, oil up, okay, oil down, dollar CAD down, and what did I say? This was initiated, yes, a question. This was initiated after Sunday open. So at Sunday open we had a gap. This was a gap, and someone asked me, was it tradable? Yes, but only after this breakout of M bearish, because CAD because oil went down, dollar CAD was up. Remember correlation, guys. If you see bullish oil, CAD will rise. If you see bearish oil, CAD will drop. Okay, CAD dropped yesterday and dollar CAD went up. So this was a bearish gap, tradable at this point because there was a normal gap here, common gap, M pattern. So here, when it broke, you could have tried to trade a gap. Yes. From H5 to almost L3, Goran made, pips. Well done, Goran. Goran made it. Well done. Okay. So you see, Goran actually shorted here and he closed his trade here. So that was bravo, bravo. That was excellent trading, Goran. And the gap, I traded. I was just trading at the close, but the thing is, it was just like scalp trade. From H5, yes, Goran, no problem. So from H5 towards this spot here. But you see, this was M, because CAD was definitely stronger today and dollar CAD went down. So dollar down, CAD up, it means dollar CAD down. Okay? When CAD is stronger, dollar will go down. You don't watch CAD dollar, you watch dollar CAD. So that is the difference. Your base currency is dollar, your quoted currency is CAD. So don't be confused with it, guys. Maybe it's easier for you when oil goes up. Again, you need to watch oil if you trade CAD pairs, really. And if oil goes up, dollar CAD will go down. If oil goes down, dollar CAD will go up. And that was that. And I would really try to trade short from 29.00. I think this has the room for further downside, especially because if we see another surge in oil price, let's say if we see another bullish spike, for some reasons dollar CAD will go further down and the price stabilize. You see, if it was for a bullish, strong bullish breakout, this should have gone a bit higher, guys. But look, it made M, strong bearish M, and went down. So dollar CAD is down. So this was it, guys, for this session recap. If you have any questions, do not hesitate to ask me, but please don't trade with a high risk. You need to be careful. A lot of important news kicking in, and I will be careful. I am careful. I'm not sure that I will trade anything. I want to protect my account, but because we have I have the obligation to inform you about possible price movements, to give you best possible setups. This is what I have prepared, but this can screw our trades, guys. We need to be careful. AUD is strong news. Europe, well, so, but it's very strong. Dollar strong. Australian strong. Pound, CAD, New Zealand. Look at this. All red. Dollar yen, any opinion? Dollar yen, yes. As you remember, I predicted it will go to 109.40 for the previous week. It went up, then it was rejected. So what I think is about dollar yen, I can tell you that this looks like range. So this is actually a range. Okay. Yes, Nathan, I will do the slides again. Okay, here, very, 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 very rangy. Like this is the first zone, and look at this. The second zone was rejected. The second zone was rejected. So there is no bullish continuation. So this could go here, reject from this region. It can also proceed on a higher momentum here. So I don't have definite opinion on dollar yen. But the thing is, my final opinion is I don't trade it. Well, as I say, if you want to trade successfully, you need to know when is the time to not to trade. Think about this, guys. And we do it long term. We don't do it short term. No problems, Jeff. Nathan, I will roll the slides again, but I need to go through questions. Dollar Swiss. Dollar Swiss is oppositely correlated to euro dollar, so I think this should go down because you don't have a very clear pattern here. Although this looks like some sort of megaphone, a broadening top that I don't like. So no clear opinion except that if euro dollar is to go up, what I think it will go up, dollar Swiss should go down. Euro GBP. Euro GBP is in downtrend, yes, and you can see huge downtrend here. And it's now sell on rallies on Euro GBP. Look for a possible retest of this zone here. So if you see the price enter within this zone, I think that you can have a nice short here from this spot. This will be a form of retest. Yes, Eglis, this is downtrend. Exactly, it broke trend line, but momentum 4-hour candle. This is momentum 4-hour candle that broke through this trend line, and yes, it's bearish. Okay, ODN, and then I will roll the slides for Nathan and all of you who join up later. ODN, back into the channel again, guys. If you remember, Nathan, I am a bit bullish on ODN, and again, this fake out caused by oil tanking was just to confuse traders that ODN might be in downtrend. Actually, ODN is still in uptrend, and you can see it why. Very clear uptrend. I will go with buying the dip. So buy the dip on ODN. Okay, it has possibility to go to at 85.20, even towards 86. So buy the dip on ODN, but of course watch for governor speech tonight. Don't go blindly. Bob is saying cheers, Dan. I'd appreciate your time once more. Cheers, Bob, and thank you. Now I will roll the slides, but be careful again. Yonad is saying took 100 pips today on ODN. Well done. Okay, this is what I like to hear. Yes, today it was very, very good day to trade. Gold. Yes, I will show you the gold chart, but I didn't do a deep analysis. So watch for this euro dollar, pound dollar first. Let's go with slides. Australian dollar, euro yen, and dollar CAD. And as I say, a lot of important fundamental things going on very soon. Carney speaks tomorrow. MPC meeting minutes early morning. Euro yen, well, there will be movements tonight, especially when equities start to move like Nikkei, ASX 200. Dollar CAD tomorrow, BOC Governor Powell will speak, so be careful. Gold is here. So what I can say is if it breaks this level, it will be M. So pay attention here. The low was 1230.08. So if it breaks this level, it probably will retest L4 and this level because it will be bearish M. Okay, so this is your first thing to watch for. Bullish price action could be initiated from this zone if it stays. So your first bullish possible setup is here. Your bearish setup is down at the break of this level. Yonan, I might buy a gold around 1230, but I would be also careful that this level holds. So if I buy and I see that gold is going against me, I would close my trade and initiate a reverse trade at the breakout. How I do it, I usually risk 0.5% or 0.3% in the first trade. And if I see that it's going against me, I will open a reverse trade with 1% of risk. So for total of 2 trades that are opposite, I would be risking 0.3%. That is in a perfect zone of the risk I have planned for myself. So my first trade is 0.3% of risk. If it goes against me, I will do a reverse trade with 0% of risk. So even if I lose a trade, I'm still only 1.3% in a drawdown. That's nothing. So that is how I do it. That is how I build the account actually. Okay, I always start with small, and if it's a win, great. And if I lose, I still have the chance to recuperate and even to make profits. It's all about the risk and a good reading of price action. So yes, I would probably go here, but I would be looking for a breakout of this level, because this looks bearish but also bullish from this spot. And you can see bullish reaction here. You see historical buyers here. If these were buyers here at now moment, look at what happened in the history. So now moment buyers, historical buyers. So it has possibility to go up. Only at the break of this level I expect it to go down. Look, momentum candle, and what can happen here? Another momentum candle, right? Okay guys, I don't see any questions. I hope that everything is clear. I hope that we will make some pips, although again, watch for important fundamental releases when governors will speak, and do not overtrade. Thank you for your time. I will be here with you soon, and I wish you, as always, to trade safe. Cheers guys, see you soon.